Good morning, everyone. This is Daily Trading Analysis with the weekly recap for this week, which has been quite complex. This week's market has been very difficult to navigate because the US economy was showing robust labor market, effectively cooling inflationary pressures, and exceeding pre-pandemic economic performance. Several significant headwinds exist, though. Inflation, while trending lower to the 2% that the Fed has as target, remains stubbornly above it. October's core PCE likely rose 2.8% compared to the 2.7%. In September, in total, personal consumer expenditures likely reached 2.3%, up from the 2.1% the previous month. This persistent upward pressure, coupled with uncertainty surrounding the Fed's future rate cut trajectory due to internal disagreements on the neutral rates, introduced significant uncertainty. The disagreement with the Federal Reserve about the appropriate neutral interest rate suggests a potentially slower pace of rate cuts than initially anticipated. So you can see that the actual numbers were coupled with the consensus on the CPI, but on the PPI front were a little bit also more concerning because the PPI is on the producer side. Further clouding the forecast is the weakness in the US industrial production. So basically, as you can see here, it is showing a decline and signaling of potential weakening in overall economic activity. This contrasts sharply with the positive employment figures. This internal contradiction requires careful consideration because adding to the global uncertainty are geopolitical risks. The ongoing war in Ukraine, in the Middle East, the conflict with Israel and Lebanon. Basically, these geopolitical factors are likely to fuel market volatility and negatively impact global growth. So basically, this week we have a lot of concerning news in terms of inflation, coupled with the fact that the Fed is talking about the neutral rate, that's the target, the way in which they are going to cut interest rates, and also a lot of Feds speaking towards this discussion. So the market said, okay, this is not clear. We have also a Trump rally. Trump is nominating a lot of stuff. So there's a lot of things going around. And we ended the week in a pretty bad note. We are going to go to the charts because this is the daily on the Nasdaq. This was the Trump rally. This was the Trump rally. We tried to establish some kind of consolidation and then we dumped. So I have a couple of levels that I would like to talk about on higher time frames. We see that we had this daily, bullish fair value gap, and also this daily. We have two big areas of support, but none of them were able to support the price action. We got also this daily volume imbalance, bullish, that got wrecked on Friday with a 2.47 day in the red, also opening this other daily volume imbalance. If we go to the 1 hour, we can clearly see that on higher time frames, we got this consolidation and then the market slowly dragged into Friday, basically destroying every single support level that I had. We opened with the daily volume and we one time framing lower into the open, we were just straight down, going through this pivot right here, going through the daily consequent encroachment. We had also, which does not happen a lot of times, an order block on the daily, a bullish order block. We had this pullback and then a squeeze. So this is basically an order block and also a breaker that got destroyed. So these all were bullish signatures that were not respected. So in my opinion, I think it's quite clear that the market narrative has changed quite a lot. We don't have this big of a rally and then this big of a rejection on a daily time frame quite often. If we go to the weekly, look at this. Look at this. This is quite concerning. So let's go to the 1 minute to really see how we could take opportunity on Friday. One of the things that I was watching was this week's opening gap. That was 1 minute. This week's opening gap were right here to the 15. It was up here. See, new week opening gap. And on Tuesday, we were already down. And we spent all the week below that new week opening gap. So that opening gap was rejected totally. And bears took control of the week since I think turnaround Wednesday or things like that. So let's go back to the 1 minute and let me go through my trade. During the overnight, we were quite bearish. I was expecting news to really affect a little bit, but look at this news. It was really nothing. So we were in the framework of this 15-minute fair value gap here from Thursday, and we were unable to really even go higher to take better opportunities on a chart. So we opened the market and we started chopping but dragging slowly down. And this kind of behavior is usually some traders try to buy the dip, but when they let it go their positions, they puke their positions, it's just a big sell-off on higher time frame. So Friday, overnight, another 15-minute being rejected, and then we open. I took a real quick scalp. As you know, I don't like to short this market, but it was the first fair value gap inverse that had a lot of problems to go through. And then I took this bullish into inverse, this bullish fair value gap. I took the inverse 1, 2, 3, was quite confident. So I took the first candle that was progressing to the downside with the stop on this candle that basically was the one going through the bullish fair value gap. So my target was this line. It was not a manipulation, a liquidity move. I was just targeting, let me show you 5 minute gaps. I had this daily. The consequent encroachment was my little target. I was not confident holding for more. And on Friday, when you have this kind of a sell-off, you never know. So even though it was a small trade, it was a 1 to 3 risk-reward ratio and also 60, $1,200. Pretty clear on a bearish day on Friday. Liquidity, just positions being sold. Bears took control throughout the week and they finally puked a lot of longs into Friday. So what else we can talk about? We can talk about weakness overall in the technology sector. We have Apple in the middle of the range, not being able to go through the inverse fair value gap. We have Microsoft 2.80 also pulling back a lot. Tesla is the only one that is pushed by Trump administration due to Elon Musk coming into the administration. But look at this. It was a pullback on Tesla of 13%. Amazon, remember that was consumer discretionary. We got retail sales number quite not good, but still, let me just adjust this. So we have a clear rejection of a new all-time highs, and we got a strong pullback opening another gap on the daily. Another big gap that is going to really affect and put pressure on Tesla, on Amazon. So Google, 2%, big rejection. We are also using the gap. Nvidia, the big move of Nvidia was rejected. We struggled a lot and we opened a little bit of a turnaround. and Meta 4%. You can see Nasdaq was literally destroyed this. There's a lot of concerns also in semiconductors, minus 3.32 in the day, and the week was almost 9%. We have ESM, AVGO, AMD, Qualcomm, and everything was down. Banks were the only thing that was pretty huge. Why? Because interests are going to be higher for longer in this Trump administration. So we have a lot of people betting we are going to see higher interest and higher earnings for financial. And obviously, look at the dollar. Dollar is doing a crazy move of 7% coming into the election. Since the election, it's basically 4%. And it's quite clear in the overall picture that the dollar, the economy, the US economy is strong. The currency is strong. And that's putting even more pressure on all these stocks and equities. So this is the picture. This is the picture in which Trump had some plans that affected the dollar, that put a lot of pressure on stocks, and then concert figures about the production, manufacturing, and inflation put even more pressure on technology sector, while financials are also holding pretty well due to higher interest rates. So this is the overall picture, what you have to really see. Look at the Russell being rejected 6% this week, and obviously the overall breadth it's coming down to a previous level of all-time highs, so rejecting all-time highs. As you can see, the momentum indicators, the trend indicators are all coming down. So there are a lot of signs for concern. The summary here is that we had the opportunity to hold some levels, but we basically rejected every single possibility. So what is my forecast? My forecast is obviously we might open an inverse fair value gap in here at some point. I will be watching the bullish fair value gap here on the daily that might become an inverse. So basically push into a dead cat bounce for next week and then clear rejection for continuing. We have here a weekly level that we might support, but I don't think that's going to be the key because we have more levels like this one, have sell side liquidity on the weekly levels, and also on the daily we have this kind of consolidation that is also will provide some kind of for the market take advantage of this short move. So this is it is what it is, guys. I was pretty bullish for Trump. The price action was showing me a lot of momentum, but that the hammer fall quite heavily here, and we have reversed a situation that has some background on interest rates, on the Fed, on a lot of fundamental activity and fundamental news that are concerning for long-term investors. So I can see how they are reducing risk and reducing their position. Obviously, shorts and sells are going to market. So I will be watching this level at 20,600. I don't think we are going to see the daily volume imbalance at 21,000 times soon. So be prepared for some kind of a dead cat bounce, a little bit of a pullback, but be sure that shorts will be pressuring this market next week. That's for sure. That's all from my side. As always, thank you for your time. Remember that I do this kind of weekly recap videos on Saturdays. Those are quite complete. I summarize the week. So if you like these videos, please give it a like and subscribe to the channel. Thank you for that support. And remember that we have the weekend to really analyze what happened, to really mark down our strategy. And next week will be a new week. So if you had a rough week, just reset, try to compose again, try to analyze what happened. You have this video for you and rest. Connect a little bit this weekend, and we will be coming on top next week on Monday. So have a nice weekend, stay safe, and see you on Monday.